if you're not psychologically able to deal with the financial markets, you're never going to make it, never. But if they'd looked at what the price was telling them, there is a lot of criteria that go into the market making a top or a bottom. There's certain little rules that a market follows. And there's a lot of people that I used to respect that have moved over to the dark side, and they just see the retail market as a very easy market to rip them off. I have seen companies that have sprung up and it's got proven track record in trading. And I've gone, where? Where can I find your track record in trading? You can't. You can't find one because it doesn't exist. I always said we're going to be multi-millionaires in a year. It's because they're all muppets out there. And I thought, well, how disgusting. We had the same sort of thing in cable a couple of weeks ago. You couldn't find a buyer when it was at just under 120. Now at 130. Do you know what I mean? And
one thing for the world out there, what would it be?
Do your homework.
Welcome to the AlphaMind podcast, where we talk trading and investment psychology, behaviour, mindset and emotions, and explore the key human skills needed to succeed in financial markets. We interview hedge fund traders, investment bank traders, retail traders and investment specialists. We talk to psychologists, analysts and people from the world of behavioural finance. We chat with performance experts, including coaches and people involved in specialist fields related to high performance more generally. Welcome to this week's episode. My name is Stephen Goldstein. My usual co-host, Mark Randall, is not with us today. My guest today is Carol Harmer, who I used to work with for a time in the 1990s. Carol has almost 4 decades behind her in financial markets as a trader, and more specifically a technical trader and also a technical analyst. In that time, Carol worked for Midland Bank Markets, which later became HSBC Markets, Nomura Bank and Credit Suisse. She worked and traded on the LIFFE floor in London and later on started her own company, Charmer Trading, which provides expert technical analysis services across the markets, trains traders, and she still trades for herself. In this episode, we talk trading, charting, analysis of price action, and how to use it effectively in your trading. We also discuss psychology and the mental skills needed to win in trading. Carol also holds some very strong opinions about the way the industry serves and treats retail traders, and she doesn't hold back. This is a great episode which you will get so much value, insight and wisdom from. At times the conversation flows so fast that we may not have sufficiently provided context on detail of what we were talking about. For that reason, I have on a couple of occasions interrupted the conversation to add some additional narrative and commentary. This episode is jointly sponsored by Alpha R Cubed, which provides high quality coaching to businesses and people engaged in the financial markets to help catalyse high performance, and the Mark Randall Consultancy, which provides powerful mind fitness talks, seminars and workshops to the corporate, investment and financial market world. If you do enjoy this podcast and have an iTunes account, please do go to the AlphaMind podcast page and give us a rating. This helps us reach a wider audience. Thank you, and now on with the podcast.
Hi Steve, nice to be here.
How is the south of Spain this morning?
Very sunny, very sunny.
Perhaps you can give us, or give the audience, a quick 2 minutes wrap up of who you are, your history, your background, what you do.
Right. Well, as you said earlier on, I started my career on the LIFFE floor, and I was a trader. I was down there from day one, obviously, before the exchange opened. And then I decided to be a trader in the 30-year bonds. Don't ask me why. And there was nothing. There was just fundamental analysis. But I wanted to be a trader. So I did, and did it badly. Discovered charts. It's another story, but I discovered them. And then I wanted to go back and find out who was driving the market, who were the guys putting the orders in. I wanted to be one of them. I didn't just want to be, playing in the market. I wanted to actually be one of those that were constructive in actually making the markets move. So, and that's what I did. I went back to Midland Bank, and then I was asked to go into a startup operation at Nomura Bank before Nomura got its banking license in London. And I stayed there, and then I moved to Credit Suisse in 1991, where I met your dear self. And apart from Credit Suisse, where I traded with the treasurer, I've traded actively, throughout my career. I've never not traded, even at Credit Suisse. I used to trade with the treasurer, normally in something obscure like Sterling Swiss or Mark Swiss or whatever. I've traded virtually every market that's out there. And I left Credit Suisse in 1996, good Lord, because I wanted to go back to the floor. I just had this, I'd gone full circle, I'd done what I set out to do. I'd learned about foreign exchange. I'd learned a lot more about the industry and what made the industry work. And I wanted to go and be a local. That's what I wanted to do. And when I went back to the floor, that's when I noticed that when I left, that the bank trader and the floor trader was about on par. And when I went back, the floor trader hadn't changed at all and didn't really have a clue about direction or how to trade the market. They didn't. So I set up Charmer Chart back then, and then the floor shut in 2000. But because I worked on screens and traded on screens, I didn't find the transition hard because we'd always traded on screens back in the bank dealing rooms. And just by accident, I got involved with the retail market purely by accident because I was asked to run a fund. And by the time I'd said yes, and we'd had the summer off, by the time I actually got to the fund, the guy that was originally running the fund had dropped 45% of it. The fund had pulled out, and I found myself with this amazingly wonderful bunch of retail traders, and who really, bless them, were not taught anything. They were very badly educated. So I set about really trying to, well, if I can teach bank traders, which I did throughout my career, I'm sure I can help educate the retail trader, which, to be fair, proving more to be a labour of love and quite difficult to do. Okay. And that is basically me.
I'd love to know that if you started a company today that was going to give retail traders value, what would you be telling them? What would be the key things you would say to them to help them get started and move towards success?
First of all, you've got to have an idea of what you're doing, right? Now, I was self-taught, but I wouldn't advocate that now. I'd say you've got to get your head right. If your head thinks that you're going to be a millionaire within 21 days, you're onto a loser. So trading is very psychological. It is very, very psychological. And if you're not psychologically right to be able to trade, you're going to fail. It's that simple. And nothing makes you fail more than if you keep losing money, because you automatically feel a failure. And that does not do well for your self-esteem or your confidence. So first, you find a platform that is honest. I know that's a hard tool or, hard order at the moment, but you find a company that's honest. You find an educator that is honest. You find people that have been in the business that are willing to give their time. And let's be fair, for the amount of time it takes to mentor someone, you're a good trader. You could make that in 10 minutes. You don't need the aggro. That's what I find when I've done like 18-hour days. But you can, but you've got to give them honesty. You've got to be brutally honest with them. And if you don't, you'll just set them up for a fall. And that's what I would do. Is I'd be one of these people, which I've never been known for my tact, but I would be brutally honest. Traders that I've trained over the years in a bank capacity, there have been a lot that I've just gone, do you know what, you're never going to make it. And even fact now, when I've had people in my courses, I've given back their money and said, don't, you're not going to be a trader. You're just not. And I think they appreciate the honesty. They might not want to hear it, but at what point are they going to keep getting bank loans out to fund something that's going wrong? You've got to give yourself time. What you said, you've got to give yourself time to learn your craft, and most blow themselves up before they've learned. You've got to have enough money behind you where the pressure's off of you for at least a year.
More than that, I'd say.
More than that, but at least a year.
Yeah.
Where these are not doing it. They're not doing it. They're listening to the hype. They're listening to stuff that is blatant lies, and they're getting caught.
The first thing is have an idea of what you're doing.
Correct.
Within that, what would you say the three things that people should try and do correctly?
You've got to be. You need to be psychologically aware of how a market can wrong foot you. If you're not psychologically able to deal with the financial markets, you're never going to make it. Never, ever. So that's one, I would think. You've got to put a lot of groundwork in and a lot of effort and a lot of time. It isn't just a matter of coming back after you've done work, and trading for an hour into the New York close. It isn't. It takes hours and hours and hours a day. You know, I've done it 38 years. I still spend hours and hours a day doing it. And I know what I'm doing. So you've got to put the time in. You've got to find somebody. If you need a mentor or a educator, find one that's actually got a proven track record, who you can trace back to day dot, and that what they say is actually the truth. Whereas this hairy-fairy have a proven track record means nothing. And you're putting your faith in somebody that probably doesn't know much more than you do. And I find that odd.
Unfortunately, there are ways that you can even manipulate these systems that keep track records for you, and it's been found out there are people doing that. I'm not talking about financial track records, Steve. I'm talking of... See, this is the thing. You're talking about now a retail track record. Yeah,
yes, of course they can be manipulated, which is why, you know, when you go back, you know, Carol Harmer started work at LIFFE in 1982. I did. It's provable. I've got photos of me at there. Okay. I worked at Midland Bank. I did. It's provable. Find as much proof about going forward with these educators that you can. Find out who they are. It don't take long. Google them. You know, sometimes I find out things about people in like minutes. Yeah. Find out before you start handing over money. I'll tell you a little story. There was one of my customers, bless him, he downloaded a free video. Free, right? Now, on these free videos, you never put your credit card details into anything, ever, not once, not ever. So he did. Don't ask me why, but he did. So this 3-hour video actually signed him up for $4,000 a month for a year, right, for newsletters. No. And I just was like, he came to me and he's just like, he was nearly in bits. He had to cancel his bank card. You know, he was getting 30 emails a day threatening legal action. He said, can you help? Sure. What's their name? What's the email address? Right. So I went on. She come back saying whatever. But it took me 10 minutes to find out what this company was up to. And I went back and I said, it's only him on my radar at the moment. Stop it, and you stop it now. Otherwise, I will make it my ambition to actually rip your company to pieces. And I will go global with you. And I will put you on my Twitter, on my YouTube. And I don't care if you sue me. She said, I'm going to sue you. Do it. Great. Because I'm not telling lies. You are. At no stage did he sign up for $4,000 a month for a year. None. Zero. Zilch. So when somebody asks you to put your credit card details in for a free trial, never give your credit card details to anybody. You know, why would you? And certainly, why would you do that? And if somebody asks you to pay up front, I've had customers that have been asked to pay a year up front. The guys have disappeared after 3 months. They're gone. You know, they've already paid up front. Don't do it. These people are out to trip you up and to do you harm. It's an whole thing, wasn't it? Trust no one, from the X-Files. And that's what you need to do. Trust no one.
Trading, this business makes you the most cynical people on earth.
Yes, but you know what? Only the retail market has made me as cynical as I am now.
Yeah.
And I never was. I was never like this. I've seen some strokes pulled over the last 10 years that would actually leave you gasping for breath. What these companies are up to, it is beyond amazing. It is beyond amazing. One day, I will write the book. When I get time, I will write the book.
Well, we look forward to that.
Well, yes, and the thing is, if you're not lying, they can't sue you. It's great.
But you know what? So very quickly, coming back to those things. So you said find a mentor, be psychologically ready.
Yes.
What is it when you do see people succeed, whether they're, whoever they are, what would you say is the characteristic that these people display? What is the one thing?
Confidence.
Where does that come from, though?
Inward. Definitely inward confidence in what you believe and what you see. You know, I was a mess as a trader for the first 6 months because I was doing something I didn't have a clue. All I saw was I was just told to go in and sell the bonds, and all I saw every day they went up. And then I discovered a chart 6 months down the line. I never looked back. Now, for me, it was having confidence in that, and I've never looked at another economic figure for the rest of my days because I don't need to. I don't need to, because as you know as well as I do, when you get up in a bank dealing environment, if your own economists can't make up their mind what the figures mean, how the hell can the rest of the planet? You'll always see, whereas I go, look, that's the price, it's there. It's going to do this, or this. That is, and the guys that succeed are confident in what they do. They don't second guess. They're not cocky. There's a difference between confident and cocky. They're not cocky because the people that come cocky are normally the ones that fall. But the ones who are confident, they're normally the ones that will go out and become very good traders.
Well, I'm gonna. This is a great chance to bring in, because you are, and you used the term technical trading before, which is quite different to the term technical analysis.
Well,
you are probably more. Although I knew you did technical analysis when we worked together, you thought like a trader. And
I was a trader. That was the difference. You can
teach more of a technical trader.
Yeah, you can teach a trader how to trade technically. You can't teach a technical analyst how to trade. Now, luckily, I was a trader before I looked at a chart.
Right.
Otherwise, I was. So everything I ever did in any of the banks was always because I was going to take a position. Because otherwise, what was the point of me doing it? There was no point. Why have a technical trading desk that don't trade? It didn't make any sense to me. As I say, we had a few little hiccups at Credit Suisse, but by and large, the majority of the time, I did trade with the treasurer. And although you weren't known for it actually on the desk, which is probably why I, wasn't too popular at the time. However,
I'm just going to stop the conversation here and add some narrative about what comes next. The conversation talks about a particular trade and a market move which Carol called almost perfectly weeks before it started. It was a huge bear move after a long rally in the bond market, which saw bond prices drop sharply and interest yields rally sharply in the major G7 currencies. That is the context to what we talk about next. Well, you got the blame. You got the blame when the market sold off once, didn't you?
I did. I did get the blame.
That was your big call, and I remember that because that's probably still my best ever year, 1994. You came up to me, I remember this very clearly, a couple of weeks before the top, and the big figure then was about 101, if I remember rightly, so a long way from where it is now. It was yielding about, I think, 6%, 5%, and you came up to me and went, "Why is everyone long, Steve?" And I went, the Fed's going to cut in the next few weeks. They've made it pretty clear. Greenspan's about to cut 50 points. And, no one, they've made money being long for the last 2-3 years, and they can only see it going higher, the bonds. And you came up to me and you went, well, these birds are about to fall out of bed by 13 big figures over the next 6 months. You literally said it like that. And I was looking at you like, you're mad.
Exactly.
And you were trying to tell everyone and no one would listen. And I think I was the only one who listened. And I completely, over the next couple of weeks, I squared my book out before that move happened. And then later, that allowed me to get short once the move started happening. Because I'm thinking, yeah, she's right. She's called this spot on. And that had only just started. And that's how I made a lot of money that year. Because, I listened to you. And, I think you called it almost to the day, to the cent.
That's what I like to do in markets, which is probably why I look at too many. But I like looking at them. We had the same sort of thing in cable a couple of weeks ago. You couldn't find a buyer when it was at just under 120. Now at 130. Do you know what I mean? And It's out on YouTube. I put it out there. You're going to be buying sterling. We're all buying sterling. That's it. And but that's what I like to do. But yeah, I actually got the blame. Like it was my fault. Yeah, I know.
These traders are getting crucified. Why are they selling? Someone went, bloody technical analysts. They called it LIFFE.
Exactly.
You know, they wanted to blame anyone and find a reason.
But if they'd looked at what the price was telling them, I mean, I'm not Mystic Meg. I'm not psychic. There is a lot of criteria that go into the markets making a top or a bottom. There's certain little rules that a market follows to make a top and a bottom. You know, what it does in the middle, you can generally work out because they're continuation patterns. So markets go up, down, or sideways. They don't do anything else. That's it. Up, down, or sideways. They don't do nothing. You know, they might close where they opened, but during the day they don't do nothing. So if you're watching for these, when these markets talk to you and you visually see something happening, like 1994, you know, like when it's going up but it's running out of steam, and the closes are getting lower on a weekly basis, the closes are getting lower on a monthly basis. You've been in an uptrend for 10 years. You know, things need to be asked, yeah? And there are people that were trading the bonds at that time that only ever traded in a bull run. Well, when I started trading the bonds, there were traders that had only ever traded a bear run. So, of course, they didn't clock the turn. I clocked the turn because I hadn't never traded before. I just couldn't see why they kept selling it, and it was going up every day. So that made me aware. And by the time that, you know, people had, when I'd seen this chart, and then I just went stratospheric, light bulb clicked, and that was it. That was me. Fell in love with charts that very minute, and I've used them extensively ever since. You know, you have to have faith in what you do. And for me, visually, what you hear isn't always what is true, you know. So when I hear figures and whatever, everybody can interpret that different. You can't interpret a price action. There's no misinterpretation of it at all. There it is. It's on the screen. And what can you can't argue with it. It's there. So
the price doesn't lie. It's the one truth in the market.
Of course it doesn't, you know. So that's why I completely and trust charts. I do. And I've never deviated from that. And I think where I struggle with it is where these poor people are probably looking at charts and really loving charts and are getting the wrong data. And if you get wrong data out of a chart, you might as well give up, because it's never going to be right. You're never going to make money, are you? Because it's the wrong thing all the time. So I was always, as you know, at Credit Suisse, anal about data. I mean, we used to have 4 different charting packages, you know, with anal about data, because without it, I was up in the air, you know. Data is everything to a technical trader. And if you think now, back when I first started, technical traders, they don't really look at fundamental news. Fundamental traders very rarely looked at charts. These days, virtually every fundamental trader is aware of a major chart point.
Well, I know some fundamental traders, and again, very successful guys, but they'll use the technical analysis often for their risk management and their money management.
Which they do.
Yeah, no, absolutely.
You know, and you're right. As I say, there are a lot of fundamental traders. I'd say 95% of fundamental traders are aware of major chart points, because you can't not be these days. You know? Yeah. You can't not be.
What always amazed me, and this is one of the things that's really interesting, actually, and again, I go back to the days where, you know, sort of, let's call it some of the older days where there were traders that were working with us that never had a single chart in front of them. They just had prices. So you put.
Well, they did have a single chart in front of them, because I used to make sure they had one.
But there was a lot who just had. Remember the old FX screen, and I was always amazed that, and there were still a few of these guys around, quite a few years later. And they were, in fact, there was one guy that worked with me at Amex in the last bank that never used a chart at all. He was an FX trader. But he always bought and he always sold at the major chart points. But he didn't know they were major chart points. He just kind of absorbed the market. He absorbed the market. He was in it all the time. And he just knew.
Well, you do. I mean, you look at the old FX traders, they would know how many times dollar mark hit a level during the day because they were trading it. Or this is what I'm saying about hours that you put into it. And don't forget, you didn't have like somebody trading all of FX. You had dollar mark dealer, you had cable dealer, you had dollar Swiss dealer, dollar yen dealer. Their job for 14 hours a day was to quote prices all day long.
Yeah.
Now unless they were brain dead the following day, they knew they knew where the support and resistance levels were because they know they could go back in their memory and see in their head that at that level it kept bouncing. They don't need a chart. It'd probably be like less than a tick chart. Nowadays you can actually do 2-second charts. Did you know that? Awful.
No.
Anyway, but on a spot desk, that particular dealer should know how many times that hit that in his shift. That's what he's there for.
Yeah.
So he probably does sell at a resistance and at a support, but he doesn't need to see it in graphic form.
In the next part of the conversation, we talked about the subject of training and market services which target retail traders. Carol has some very strong views about how retail traders are treated and served by educators and providers of trading services and platforms to the retail market. When she talks about spread betting services, that is what is largely the situation here in the UK, in the US and elsewhere. You might see them more as broking services, particularly in the equity market. But the same situations apply. Carol has very, very strong views and really fires from the hip with some very choice thoughts about training and education services for retail traders and the platforms which serve them. You made a really good point about educating the retail trader. I think the retail traders even now are badly let down by the education that's out there. Yeah, a lot of them want to just, in my opinion, take money from them.
They do. You are absolutely 100%. I say, funnily enough, it's moving over to the dark side. And there's a lot of people that I used to respect that have moved over to the dark side. And they just see the retail market as a very easy market to rip them off. And I find that quite disgusting. My next plan is to do a structured online webinar form of trading course, where people, not for these stupid amounts of money that the retail trader is being asked for. We're not in bank dealer rooms in the 80s and 90s anymore. These are normal guys, and most of them have a job, and they get back from work at 6 o'clock at night and want to trade into New York close. No, they don't want to spend thousands and thousands and thousands on education when most likely they've been ripped off 2 or 3 times in the past. And that has been my experience. I hear horror stories where people ring me or email me and tell me these things. So I don't have a very good view of the educators out there at the moment, because a lot of them, if you think that you've got people that actually have never worked in a bank, never worked on the floor, they've never worked in a banking or dealing room environment, trying to teach others how to do it, it seems a bit weird to me. I don't see how that can be.
Until you've done something like 15 or 20 years in this job, I don't think you're qualified to educate anyone, to train anyone, to coach anyone. I worked with you in the 90s. I had a really good time when I was working with you, and then I also had a bit of a bad time towards the end of those years. And it was that bad time where I started to learn about myself.
I weren't there then, I'd left.
I think that's when I stopped making money when you left, Carol. But it's joking aside. In my opinion, I started to become a good trader about 13 years into my career. It was really my final third of my career when I started to succeed consistently, and really trusted myself that I knew at the end of one year I was going to come in the next year, and I, with a lot of hard work and perspiration, was going to probably make a decent amount of money that year. I don't think I had that until then, and that's so how could I possibly have taught someone? I've seen somebody recently offering a trading course on LinkedIn, and I know literally the year earlier he was selling second-hand cars.
Well, listen, I've got one that come on a course last October who now has a trading academy in Portugal. He didn't even know what a Eurodollar was. You have got these people. His family have money. They've got a chain of hotels in Portugal. He now thinks he's a rising star. I'm like, get my name off your website now.
Well, there's two things. Yeah, there's two things I tell retail traders, because a lot of them come into this business. They come in with something like, this big ambition. I just want to make a point. I'm going to differentiate between teaching someone and mentoring someone. I do see people who have had a lot less experience mentoring other people, and that's okay because they're actually in the job. They're doing it and they're working on the side with people that they're just guiding. So I'm talking really about teaching here, training, and there is an awful amount of bad teaching and trading going on. And I don't think anyone's going to, people come in with completely skewed expectations.
The thing is, it's the power of advertising. Look, Steve, we both know what these spread betting companies do. We both know that they're not putting up on there going, hey, guys, by the way, 90% of you will fail. What they're doing, it's slick advertising. So they're hooking people in to a very vulnerable part of their life. I mean, I've had guys that have come to, they've lost their pension fund, in a matter of months. These guys don't care because it's not their money, and they make money whether or not the guys make money or lose money. And it's very much like the old, it's like the life system. All the spread betting companies are doing, it's like exchange fees. So you pay per contract in, per thing out, clearing fees. And all that is just to take money out of you. But at least on life, it was your money or a bank's money, and you were actually given some form of training. Here, you're not. You're given a platform. You put up your own money. Nobody helps you. Nobody actually gives a damn. And I find that I just can't see how it's gone unregulated for so long. And these mentors and educators are springing up daily. There's thousands upon thousands of them on the internet. And they can still get away with it. And when they do, they just close down and start up somewhere else under another name. I don't see how it can carry on. I mean, one, it gives our business a really, really bad name. But until you get the retail trader to realise it is a process and you've got to learn how to trade from people who have been there, done it, got the T-shirt, and whatever instrument you're trading, the person who's mentoring you has done it and traded it, you're not going to get a way out of this 80% are still failing 10 years later. And really, in any other business, if you had an 80% failure rate 10 years later, you'd close it down, wouldn't you? But it doesn't. It feeds itself because it's now huge business. Huge.
Well, it's almost like if you want to make money in the markets, teach someone.
Absolutely. And it doesn't matter how bad you are. If you can shout louder and jump up and down and you're any good at marketing, you're done. You're sorted. Yeah. I have seen companies that have sprung up and it's got proven track record in trading. And I've gone, where? Where can I find your track record in trading? You can't. You can't find one because it doesn't exist.
It's interesting because I I had a really good meeting. I met with Jack Schrager last week,
Oh, yeah.
and we had a really good meeting. He's writing a new version of Unknown Market Wizards.
Ah,
Yeah, so he's going for the unknown guys now. He's, I sent him quite a few names of people that I know in hedge funds and banks, and he said he's trying to go with people who have made money, succeeded, and have flown under the radar. Either recent ones. So I gave him some of the young. There are some young private traders, and I've sent him some of them, and he's interviewed them. But he was really adamant on having a provable, documented P&L. There's a lot of people that want to build a reputation by doing these interviews. And I was sent an interesting tweet earlier this week by someone who he's trying to get some. Are you familiar with the podcast Chat with Traders?
no.
Okay,
I run a trading group, so I'm caught up with them on a day-to-day basis. So I try, I really only have a look at the stuff you send me and other people who I know in the market. But apart from that, I don't really have the time.
Yeah. Well, this is a great series. It's been going about 5 years, run by a guy called Aaron Fifield, and he's got some brilliant interviews on there. And someone approached me and said, I'm trying to get Aaron to do an interview with successful FX traders. Now, the problem is that Aaron has not been able to find anyone who's a retail FX trader who's been successful, who doesn't teach. I guess he's found a few, but they probably don't want to do the podcast. And I know a few, but they wouldn't want to do a podcast interview. They're always fearful that the algos are going to find their method or system and sort of start getting inside of them.
The algos will never find your eye, and that is the one thing a good trader will always come out on top is the eye.
I know, but do you know what? There is this fearful side about them. There was one guy there's a few guys, but when algos really started, they felt they were being shadowed by algos. They weren't. It was just the way algos work, jumping in front of their orders.
A bit like the LIFFE floor did to us banks, yeah.
Yeah, but they didn't realise it. They thought it was them being shadowed. So it's created this fear amongst some of these guys that are very large. And there's one guy I know, and he's not just an FX trader. He trades futures. He's had incredible success in the market. He can actually do €50,000 futures on his own account in one go.
Yeah, I know someone like that. Yeah.
So it's these guys are out there, and they've been doing it for years, but they want to stay under the radar. They don't want anyone to know about them, so they don't want to do these. A lot of them don't want to do these podcast interviews.
Well, to be honest with you, until I got involved with the retail market, I really didn't have time to do anything like this. I didn't want to teach. I was quite happy trading my own account. I didn't want to, you can, this is when we used to have brokers before they all went horribly wrong. But, the idea, when we all worked in London and you were stuck in London or any other financial city in the world, the idea of actually being able to sit on a beach and trade was far off the wall in 1982 as anything that I've heard ever since. But you know what? It was the reality 10 years ago. It was 10 years or 11 years ago that actually became a reality. And that, I think, it's changed. It's changed the way. And then all these spread betting companies just sort of come out of the ground, which I thought the concept was really, really good. I think what they've done since then has been bordering on criminal. And I've waged a war on these spread betting companies for many, many years now, purely because I've got friends who use a retail platform, and they've been slaughtered on stocks that weren't tradable, wasn't traded. And I know it wasn't traded because I've traded through the night trading it. so I can see all the prices from the bank. So,
Do you know what? I know I stopped trading for a living about 10 years ago, but I never actually properly stopped trading. I don't really talk about my trading these days. I kind of have a hobby account. And
yeah,
a number of years ago, I had I put on a position on a euro. It was a euro Swedish cross, and I'd left
right,
I'd left it for a couple of weeks. You know, it
right.
was a bullish position, and it started to go up. And I didn't even look at it every day. You know, I'm not a day trader or anything like that. I've had my times in the past, but you know, I literally know where the market is all the time. So I was quite happy with this position. It was making a lot of money. And then I went to close it out. And I went on to, and I won't name the name of the spread bet firm, but they're one of the leaders. My position wasn't on there. And I was
Oh,
like,
really?
something's odd. And I checked back, and about 3 weeks earlier, it was closed out. And I knew it never traded down at where my stop was.
Correct.
I actually had my own Bloomberg at home then. So I was
Mm.
able to check the actual prices in the market, the real trading prices. It never traded near there.
No.
So I called them up and I said, what has happened here? You've stopped me out many big figures lower in a level the market never closed. And they said, we'll get back to you. And then they said, well, what happened was there was some GDP data in Sweden.
Oh, God, how many times have I heard that?
And at the moment it came out, all the bids and offers on the screens disappeared.
Disappeared, yeah.
And the way it works in their system is it then takes the extreme of the bid and the else, the bid and the offer. And the bid was about 5 big figures below the actual market price. It never traded within 5 big figures of it. But because it was there, it stopped it out in their system in a millisecond before the data.
Funny that.
Yeah.
I've heard that story. I've seen it myself when the SMB did what it did and didn't support the Euro Swiss. You know, a really good friend of mine was short dollar Swiss, long Euro Swiss. The dollar Swiss wasn't activated. The long Euro Swiss was, and filled on the stop 16,000 points lower.
Wow.
Yes. So not only did he wipe him out, they actually went after his house.
No.
I mean, it was criminal, absolutely criminal. Now, you know, in the bank, I remember the same, what you were saying. I had a Mark Swiss position on with Midland, and we used to have some dodgy fills out of Midland, Sydney, bless them. And I got in one morning, and I'm like, really? And my treasurer's there. I'm like, there's no way I was filled two big figures lower, and now it's 3 big figures higher. It's just not possible. Not with Mark Swiss. Now, in those days, you know, honour amongst the banking industry was, or the trading industry, was paramount. So my treasurer got on to their treasurer and just said, this isn't good enough. Do you know what I mean? There was no reason you could possibly have done that. The market didn't trade there, blah, 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 blah. You're absolutely right. Really sorry, won't happen again. Here's your money back. Now, with some of these spread betters, when the table was trading at 19.5, and that is its low. It did not go any lower than that. How do I know? I was trading it through the night. So I saw all the prices coming through. Because like you, I have Bloomberg, CQG, blah, 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 blah.
Yeah.
Right, so I know where that low was. I know. And you had some platforms, one who I've particularly gone to go at, with a low of 112. So they'd stopped everybody out, like 6 big figures lower, at a price that didn't trade. You know, you can't go back to them. I mean, I absolutely slaughtered them, and they did actually put it up to 116. But the point is, that's still 2.5 big figures below where the low was.
Yeah, I did have one firm as well. I did have one firm as well that used to correct it for me. And I know we're not mentioning names, so but they did have the good grace on at least 2 or 3 occasions. So I guess if you have a good relationship with your broker and you do enough business, they'll do it for you. But the retail traders don't know that.
Yeah, they don't. And the thing is, a lot of retail traders, the only price they see is the price that is on their platform. You know, and I always say to them, it's going to cost you, but get in a independent charting package. Independent.
Yeah.
You know, if you're just looking at your platform pricing, you don't know if it's right or wrong because you've got nothing to gauge it by. You haven't got a clue.
The thing that's happening at the moment in the US, I know a lot of our listeners are equity day traders in the US, and what's been happening over there is a lot of the brokerages just in the last couple of weeks have gone to zero commission. And I've had a conversation with someone on Twitter earlier this week, warning them the dangers of dealing with people with zero commission. Because I remember when one spread bet firm did that in London a few years ago, and they went under very quickly. And they took all their, well, it's not a lot to matter because I know someone who lost a lot of money. They took all their clients' money with them.
I mean, I have got no faith at all in the FCA or the FSA, whatever it calls itself these days.
Yeah.
It's always been very, very wishy-washy. It's never helped the professional trader. It's been set up just to do compliance on things that really don't matter. And really what they should be doing is looking after the retail trader who is getting short-strawed and short-shoved every which way but loose. One, by their own platform, and two, by these pretend mentors, pretend teachers, you know, educators, whatever you want to call these people that have probably had zero banking experience at all. So how are they going to, you know, when you think about 20% of them make it, you're like, well, do you know what? That's not bad considering what they're up against. At least when we started, you know, there was a modicum of honour and trust within the market, and you had to have that, especially on the floor. You know, when it was kicking off, you had to go, okay, if there's an out trade, there's this trust. We go 50-50 on an out trade, you know, because we can't stop now and sort it out. We've got to get through the end of the day.
The floor was probably harder, in my opinion, because, you know, if you didn't make money there, you weren't paid. Whereas at least in a bank, and I always say this is a huge advantage in a bank, we got paid. You know, if I had a bad few months, I still had a salary at the end of the day. But, you know, you still, I mean, you had to sort of fail for 2 or 3 years to lose your job in the city once you were in the trading role. Once you've made it through and got on that desk, you know. But...
Yeah, and don't forget, you know, many years ago, you had this. Don't forget when I first started work for Midland Bank, I was on the LIFFE team at Midland Bank, and then I went back to the bank. There was never any pressure at all for the spot desks, which was the trade, like the spot desk, to make money. The idea was to fill client business. That was it. There was never. So all they did all day long was quote. All day long. I mean, don't get me wrong. You would hate to be a spot dealer because that was hard graft. You know, it really was horrible. And they never had to make any money.
Now, at this point in the podcast, I'm just going to cut in because you may be getting a little bit confused when Carol is saying that that the FX traders, the FX spot traders in the banks never had to make any money. What she is talking about is having to make any money by taking directional or prop risk, what we would call alpha generation. So the businesses and the traders within the business did have profit targets, but this was on filling orders and being clever around that, and maybe running some very short-term tactical risk connected to the orders. So when she talks about making money, it is in the context of generating alpha through positioning, which is, of course, what people have to do these days. That luxury of taking money from the order flow, it is largely gone, particularly in the spot FX market. So I'm going to go back to the podcast in a minute, but first a quick word from one of our co-sponsors, Alpha R Cubed. So Alpha R Cubed is a coaching business which works with financial market businesses, people in financial markets, ranging from institutional traders in terms of hedge funds, investment banks, energy firms, asset management businesses through to retail and private traders. They provide powerful coaching programs which work at a human level on the trader, helping them improve mindset, helping them improve how they cope with and manage risk, helping them become better at being traders, more so than focusing on what they do as traders. If you want to know more about their programs, you can go to the link at the top of the AlphaMind blog, or you can go to their website page, alpharcubed.com. Now back to the podcast.
And it was only my treasurer when he came over from New York and said, well, do you know what? You can actually, the spot desk can make money. And he actually started to turn it around and obviously asked me to go back, and because nobody had heard of charts. Well, he'd seen them in New York. And so I was probably the only other person he could relate to, because I used to sit there and chat to him every night, you know. But can you imagine, you're going back 45, if you go back 40 years, there was no pressure on any trader ever in a bank FX room to make money. Size wasn't big as what it is now. But still, I mean, Midland Bank could turn over, you know, $1 billion in a day across the spot desk. Now, that isn't to be sneezed at in 1984.
Just for the sake of our audience, who may be a bit younger, Midland Bank became HSBC.
Yes, it did. Oh, yes. Midland Bank became HSBC. Now, this applied to all banks. You know, that was how, and funnily enough, I've got a friend here who I've known for like 30 years this week. He was saying about the foreign exchange market, and I said, you want to see something really hairy here? Look, here's a chart of cable, which is sterling, obviously, for those who don't know. Here's a chart of cable that traded like the mid-80s in central bank intervention. And when you see what we was up against in bank dealing rooms then, you know, this little blip has been a breeze, considering that the sterling was absolutely hammered down when the Fed decided the dollar was going to get, you know, higher, and every other currency in the world was going to fall. And that's what they did. They just come in and bought dollars and bought dollars and bought dollars. So, you know, we lived through very turbulent times that make Brexit actually look like a walk in the park. But that's how you learn. You learn on your feet. But you did have people there who'd been trading for like 10 years who could at least guide you a little bit. Now, there's no one. You've got you and a laptop. That's the majority of people. You said to somebody, a retail guy, look, go and get Bloomberg in. They're going to go, whoa, no, we can't afford it.
No,
now, I'm not saying they'll have to rush out and get Bloomberg, but what they should all do is get an independent charting package, at least to check prices. Otherwise, you're just going to lose money. I mean, you're just never, ever going to make it.
I think if you know, with the benefit of experience, you know, if you were a retail trader, I say to them, you know, you got to bank on not earning any money for 5 years minimum.
Correct.
And then you've got to bank on being able to live
yep.
without any income for quite possibly longer. If you want to make a success of it, really what you need to do is you need to reinvest your winnings. Once you do start winning, you can't live off them. You need to reinvest them to grow your capital. And then,
I agree.
Yeah, and then, you know, you need costs. You know, I mean, as you say, one of the things that when I started and when you started, we had people around us to mentor us. You had people that supported you when it wasn't going well. You know, it was a tough environment. I mean, it was brutal at times. You know,
it was
really
brutal.
was. And you learned from that. You know, the whole environment was geared to make you to be able to survive in adversity. You know, and I think that was part of it. I think the idea was that you're brutalized almost from day one. And if you survive that, you know, if it breaks you in the first year or two, you know, you're never going to make it as a trader.
Do you know what? And yet I've got to say, I was always very, very, very lucky. You know, I worked on LIFFE and at Midland Bank. I worked with some fantastic people and at Nomura.
Again, I'm just going to interrupt the podcast at this point because we had a conversation, which unfortunately I'm not able to play on the podcast because it mentioned firms and it mentioned individuals, and it was in the context of talking about adversity and how sometimes you end up with colleagues or managers or people that are part of your life or your trading world who unconsciously or unknowingly interfere with your process and mess with your mind. And that becomes part of the adversity you have to deal with as traders. And I'm sure most of you listening here will have experienced in that way, either directly or indirectly. The obvious example is to think of Twitter and social media and seeing all these names and people who are constantly telling you about how much profit they're making on a day-to-day basis. I don't know any trader, any real trader, any professional trader who would ever boast about their profit, whether it's on the social media or whether it's within their own life. It didn't happen. It never happened as far as I've experienced it. I'm not to say that it couldn't happen. These people that you read about on social media are almost certainly not traders. They're there to promote some sort of training course or teaching program or subscription service. But that messes with your mind because you don't know that when you see that. And that is part of the adversity you have to deal with as a trader. In the same way that when you have a boss, a person you don't get on with, other people you don't get on with, that can mess with your mind in the trading world. This is why trading is so difficult, because there are long periods where you start to question yourself and your own ability because of how you think everyone else is doing. I've not just experienced it, I've heard it from clients in large hedge funds, in large energy firms and investment banks. This is part of the constant battle. So this conversation was really about adversity in trading, and everyone experiences it, and it can really mess with you. And just to relate my own experience again, this happened to me probably about the 8 or 9 year mark into my career, and it really impacted me for about a 4 or 5 year period after that. My trading went through a severe dip that I could probably connect back to those experiences. And fortunately, I was able to come out of it with support. I actually had coaching, which was a huge benefit to me. And I went on and I was stronger because of that. And I had far more success in my later years after that experience. Anyway, that's enough now. We're going to go back to the podcast, but first we're going to have another quick word about our other co-sponsor. The Mark Randall Consultancy delivers powerful, high-impact mind fitness programs into the corporate, investment and financial market world. Mark delivers talks, workshops and seminars about mind fitness, which is built around the idea of the mind being the smartest piece of technology we have, and how you can optimize your mind by removing thoughts and turning down the volume within your mind to get calmness, clarity and control on demand, allowing you to reset, refresh and recalibrate so you could be at your best and most optimal in the challenges you face every day within your work. To find out more, email ceo@markrandallconsultancy.com. Thank you very much. Now back to the podcast. Yeah, I think adversity is a it's a huge thing, and one of the themes I've noticed, and my colleague has noticed it as well, not Mark, who's not with us today, but another coach I work with, how many of the really successful and extraordinary traders, they've experienced some sort of major adversity in their life. And I commented earlier this week on Twitter about how I've noticed how many successful traders that I've coached in recent years that suffer from dyslexia or even a form of autism or bipolar, and yet they've been incredibly successful. And it's almost like that we don't know whether it's maybe some ability to spot patterns that other people don't see, or just because they've had to deal with adversity all their life. Because I've got this other theory that you're very unlikely to succeed in trading if your entire life has been a glide path. And then you
Well,
come into
that certainly hasn't been mine.
no, but you meet these people that come into the markets and they've gone through school, they've been through college, university, top grades all the way through, land a job at the big firm, and then they get into the financial markets and suddenly it doesn't do what it says on the tin. Their entire life they've been very good, they're very smart, very intelligent, very bright, but they've never really had something like that they can't, that is a complete head fuck, basically.
Well, I think that's why LIFFE produced so many great local traders. Now, whether you agree with the concept of what LIFFE was all about, they actually have really balls of steel.
I'm going to stop you again, because I'm just going to translate that for many people who are listening are going, what's he talking about LIFFE for?
All right.
LIFFE was the London International Financial Futures Exchange. It was the LIFFE floor in London where futures and options were traded. So
Correct.
It closed in 2000. So you can carry on now, Carol.
These guys, whether they were, none of us had any trading experience. The only ones that had any trading experience were the ones that come over from Chicago, who spent 6 months with us before LIFFE opened, sort of training us and basically telling us what to do, really, because we really didn't have a clue.
Yeah.
But, it brought out some really excellent people who actually thought, do you know what, this could be a really great thing. And a lot of the really great traders from those days were floor managers. They were they headed up the trading team, and they just said, I want to do it for myself. This is like nothing we've ever seen, ever been involved with. And those are the guys that I have a lot of respect for, because they weren't brought up with the silver spoon. A lot of them were really sort of very basic working class people, but there was something about their drive and ambition that they weren't ready to settle for a salary. They wanted to work their own hours. They wanted to do it their way. And it was new and it was innovative. It was nothing had ever sort of hit the market like it before in London. And a lot of the guys had gone out to Chicago, so they'd seen that LIFFE seats were being sold, and they wanted part of that. And, you saw some extraordinary people emerge from that. And then you had like London investment bank managers, who really just did a lot of lunch. Don't forget, we did play hard. I can confess, we did play hard, but we worked really hard as well. And it's like anything, when it starts off, it's all new and exciting. And I think as it got bigger and bigger and bigger, people go on about the LIFFE local, but all the banks would have been the right same way round. So you needed liquidity to add into a market. And they were very, these guys would be the other side for 10,000 gilts or 10,000 bunds. And in some cases, one of my personal friends would be doing 30,000 Euribor contracts. Now, that is an awful lot of money when you think a Euribor contract was like $1 million. Yeah. So the sums of money that these individuals took on was immense. And I think that gets lost a lot. And I think if you had that sort of, and there were no preconceived ideas, it wasn't greed that propelled them. If they wanted to be greedy, most of us had extraordinary salaries down there and bonuses, and could have just sort of had a very easy-ish life. They didn't have to go out on their own and really make it work. Do you see what I mean?
Yeah.
So, for me, when somebody says who makes a great trader, I can think of 6 off the top of my head that come from that background. From a bank type, from the bank trader, I struggle to think of any, to be fair, of the people that I've worked with, because they've worked in different aspects of it. You had prop desks, you had options desks, you had futures desks. But, on Life, they stood out because they actually had their own money. And if they couldn't do it and not really know what they were doing in those very early days, I think because they weren't motivated by greed. I know it sounds bizarre now, but I do think the retail market needs to take check a little bit and say, hey, I'm not going to be a millionaire in a month. It doesn't work like that. And I have seen advertising that still says you can have you can earn $5,000 within 21 days. I've seen it today, and you're like, do you know what? That is just a blatant out and out lie. Well, I tell you what, if that's the case, are you going to back me? And I guarantee they wouldn't. So they are just allowed to put this spin on just lies. You're never going to get a retail trader to make $5,000 a month consistently after 21 days.
Or even 21 months.
There you go.
This is, people forget that trading it's a highly skilled activity. It really is. That's why I say you want to bank on 4 to 5 years, start succeeding at this.
But that's not what the spread betting companies want to put out there.
They need people and they need a constant churning. That's how they make their money.
Yeah. And the real annoying part, obviously we don't want lawsuits, so I'll keep very quiet. I remember a company that was starting up a spread betting company. And he said, would you put your name to it? And I was like, do you know what? I think that's a really good idea to open up the market. He went, he said, we're going to be multi-millionaires in a year. He said, because they're all muppets out there. And I thought, well, how disgusting. I said, no, you're all right. I don't think I'm going to do that anymore. And do you know what? Sadly, he was right. Sadly, he did go on. And the company just got strength to strength to strength. And that was that all across the board. And I sat back and I thought, for 10 years, how do these people that put their money in these accounts, how do they not see what is going on under their eyes? Why is nobody saying anything to them? Why are they just fodder for these companies?
Well, listen, Carol, I'm really conscious of the time. We've talked for a long, long time.
Yeah, you're 45 minutes sort of dragged on by about 30 minutes.
Listen, this has been brilliant. I'm going to start winding it up. And any final thoughts from you?
Well,
not on the markets. If you were to, we spoke a lot about retail traders. And of course, this applies to trading in general. But, if I'm trying to think, what one nugget could you leave people with? One piece of advice. If you could just say one thing to the world out there, what would it be?
Do your homework.
Thank you very much, Karen. Yeah.
Do it.
And I don't think enough people do that. There's a lot of people I know who come to me, they want coaching, and then I start working with them, and they don't keep journals, they don't analyse their performance, they don't look back at what they did well, they don't reflect, they just come in, do it, and go, and they wonder why they're not developing or advancing or growing.
That's not good enough, Steve. They have to. You get out what you put in.
Yeah.
That's the point. And if you're gonna worry about spending money on services you need, you should rethink what you're doing and not do it.
Yeah.
Because otherwise you're just going to be one of the 80% and you're not going to make it.
Well, listen, I think you're right. I actually think that the attrition rate is much higher than that, but it's one of those things. Thank you very much, Carol. It's been brilliant.
You're more than welcome, Steve. And next time you want a 40-minute podcast, I'll reschedule my afternoon.
It was a brilliant talk, Carol. You really did let rip a few times there.
Yes, as I said, I'm not known for my tact.
As a reminder, can you just let people know who your business is, what the name of it is, its website, where they can find you on Twitter?
Yes, of course. You can find me on YouTube and Twitter and on FX Street under Charmer Trading. That's my company. I'm Carol Harmer, but mainly Charmer. I've always been known as Charmer.
Google Charma Trading,
Charma
CHARMER.
Trading. Yes,
Charma
yes,
Trading.
I
Brilliant.
am.
Brilliant. Thank
Because
you.
my name is C. Palmer, so it was a natural thing, you know. That was my nickname on the floor, and that's been it was a natural thing when I started my own business back in 1996.
Thank you very much. Thank you to Carol for her thoughts and reflections, which hopefully proved useful and valuable to you. If you enjoyed this or any of our previous episodes, please be sure to share this with your colleagues and peers. And if you could give the podcast a rating and a review on iTunes, that will be very gratefully appreciated. Once again, a quick thank you to our sponsors, Alpha R Cubed. To find out more about their powerful coaching services, go to their website, alpharcubed, that is the letter R.com, or email them info@alpharcube.com. And the Mark Randall Consultancy. You can contact CEO at markrandallconsultancy.com to inquire about their services. You can find out more about AlphaMind on our website, alpha-mind.net. You can visit our blog, alphamindblog.blogspot.com, or Google AlphaMind blog. We have a compendium of articles on there and information on our page links with lots of interesting lists for traders, and also details of our powerful coaching program, which works with traders on trader mindset and developing better trading performance. You can also connect to and follow us on Twitter at AlphaMind101, and also we have a LinkedIn group, the AlphaMind Group. We will be back next week with a new episode. You can subscribe on iTunes, Spotify, Google Podcasts, Stitcher and Buzzsprout so as not to miss that or other future episodes. In the meantime, have a great week, and once again, thank you for listening.